But one theme which we have been discussing is the solid auto demand and the commercial vehicle upcycle. We've seen total CV sales trend up to 2.24 lakh units in Q1 from 1.46 lakh that we saw in Q4 of FY20. To discuss what this could spell for CV financiers, we speak to a key player today. Arulselvan D is the president and CFO at Cholamandalam. He is now joining us. Mr. Arulselvan, good morning. Thanks a lot for joining us. So, you know, the kind of CV numbers that we are seeing, is that reflecting for you as well in terms of financing? Are you also seeing a bit of an upcycle?
We are seeing upcycle in the lights and mini lights. We are not a large player in the heavies where the fleets are concerned. So right now the demands in heavies are more on the fleet side, where the fleet operators are going through the updates or their renewal of their existing portfolio. But that is also giving a good flip to the used segment, because they are right now moving out their BS4 vehicles and replacing them with BS6 vehicles, so which helps the BS4 vehicle market in the used segment pick up. So we're seeing good traction across the segments which we are having in lights, mini lights, cars, and in the used segment of heavies. Heavies new will have to pick up a little bit more in the segments which we operate here.
So how is, sir, hi, good morning, Prashant here. So how are disbursements looking now for in Q2 so far? What's the rate of growth? And could you give us some numbers?
Disbursements in Q2 are growing well. I just cannot discuss the numbers per se, because they're still, sort of current quarter numbers, but there certainly will be in the range of above 15-20%, which we have been giving as our guidance.
Okay, above 15-20% is the disbursement guidance, right, for the full year. I think you've been holding on to that for a while. But Mr. Arulselvan, generally commercial vehicles, when the uptrend starts, it lasts for a few years, about a 3 to 4 year upcycle. At what stage of the cycle are we in right now for commercial vehicles as a whole? I heard you mention that it will still take some time for heavy commercial vehicles to return back to growth. So at what stage of the cycle are we in, and how long do you think this can last?
The commercial vehicle cycle had been on a prolonged sort of a degrowth over the last 3 to 4 years, even pre-COVID, because of the load capacity increase, as followed by the BS6 implementation, etc. So it's long due for a sort of an upcycle, which is what we're seeing right now. Even now, we are not in the volume levels which we had as an industry had clocked. The pre-COVID levels, so there is still a lot more steam left in what that needs to happen in the CV segment. So we expect this to continue in the current year as well as in the subsequent year, which is FY24, and we need to take a call at the end of 24 to see whether will it further move up beyond that.
Just one follow-up there. Why do you think the CV cycle has not reached the pre-COVID levels? I mean, a lot of the sectors that it caters to, whether it's infrastructure, real estate, have picked up significantly over the past many months. But for the CV cycle, it's still taking time. What are the challenges that still persist?
You can see the volumes. The volumes have not touched the numbers which was pre-COVID levels. As an industry, again, I'm talking. So there is more in the case of heavies and lights, the CV part of it. I'm not getting into the tractor. It did pick up in between, but the CV part is still not yet reached the numbers which it was pre-COVID. So that's the space that I'm referring to. So in a normal situation, the subsequent upcycle will take it beyond the levels which it had touched earlier, expecting that to happen in the coming year.
So, there's a lot of focus at the company with regards to diversification, right? New horizons, as you've called it in the past, new segments. And that's now almost 20% of overall business, isn't it? Could you tell us where is the maximum focus, and which of these segments are you most bullish on?
the 20% part because that is not the new segment which we talked recently. So if you look at our portfolio, we have the vehicle finance, we have the LAP, we have the HL. The LAP and HL were already existing businesses which have been running for more than, LAP at least more than 10, 20 years, and the HL business more than 7 years. The new businesses which we ventured into are CSEL, which is our consumer and small enterprises loans, then the SBPL, which is a small business personal loan, and the SME segment. These three segments have still not come to the 20%, at least from an asset perspective. I think in Q1 they were at the range of around 3 to 4%. They will move over the next few years, subject to our comfort in scaling them up. To around 10% is the expectation.
Can you give us some guidance on what the asset quality trends could be? How much of your restructured book can perhaps go bad over the next 12 months?
Yeah, asset quality has been holding fine. Even in Q1, we have improved. Normally in Q1, generally, pre-COVID, they used to be a little bit stagnate. But we have improved, and you will see some more traction in improvement in the current quarter. Current quarter, as you know, even again pre-COVID levels, Q2 is always a bad quarter because there is a lot of rains and the mines will be closed. The roads are not, very effectively put to use, and a lot of repairs and maintenance happen this quarter. So, but Q3 onwards, we expect to be on a much better footing in bringing down our NPA levels further from where we were in Q1. In Q2 also, we'll see some improvement, but it may not be a significant improvement. But we expect Q3, Q4 to be of significant improvements and bring it back to the pre-COVID levels.
Okay. All right. Thank you very much for joining us, sir. Good speaking with you, and it's always a pleasure listening from you. That's the management at Cholamandalam Investment with perspective coming through the market. Is doing just fine.